As we've been discussing on this channel, you need to be concentrating on building your own financial security. By the end of this video today, you will see clearly the major differences in how home ownership versus renting will contribute to your own financial security and wealth. Today, we'll delve into the age-old debate, renting versus owning a home. While both offer a place to live, the long-term implications can significantly differ. This presentation explores the benefits of home ownership, particularly how it can contribute to building wealth over time versus renting. We'll explore concepts like equity, appreciation, and tax advantages, which will determine what they all mean as we go through this, all of which can put you on a stronger financial footing in the long run. So buckle up, renters and aspiring homeowners, as we explore the path to building wealth through home ownership. First, let's review the advantages of renting over home ownership. Renters have the ability of living in a place with no cost of selling a home, so that if they need to change locations, they can do so very quickly. The renting may also be your best option if that is your case. Renters are locked into a set rental amount each month for the full term of the rental contract. Some rental agreements include a yearly cost of living increase, but some do not. Renters usually enjoy having the landlord come to repair and maintain the rental property, which is an advantage for them. Most rentals include some of the monthly expenses, such as water, sewer, internet, and sometimes even electricity or heating, and exterior amenities like landscape and playgrounds. Now the details of home ownership. The overall cost of home ownership tends to be a little higher than renting, even if your mortgage payment is lower than the rent. Here are some expenses you'll be spending money on as a homeowner that you generally do not have to pay as a renter. One is real estate property taxes, trash pickup. Some renters are required to pay this by their landlord. Water and sewer service. Again, some renters have to pay part of that. Now, pest control, tree trimming, homeowners insurance, pool cleaning if you have one, and lender-required flood insurance and earthquake insurance in some areas. Now, some of the advantages of home ownership. One is building equity. Renting builds the equity of the landlord, not you. In owning a home, your ownership stake grows. Each mortgage payment in home ownership contributes to your ownership stake or equity in the property. Over time, as you pay down the principal amount of your loan, your equity increases. This equity represents the portion of the home you truly own, free and clear of the mortgage. One of the most significant advantages of home ownership is building equity. With each mortgage payment, you're not just paying rent, you're building ownership in the property. This ownership stake is called equity, and it grows over time as you pay down the principal amount of your loan. Think of it like gradually buying shares in your own home. The more principal you pay, the larger your ownership stake becomes. This accumulated equity holds immense value. Imagine that renting an apartment is like paying for a hotel room. You get to use the space, but you don't own any part of it. On the other hand, buying a home is like paying off a mortgage on a property you own and are getting a growing percentage of. Eventually, if you stay long enough, you will own the entire property, free and clear of any debt. All of the value is yours. Equity defined is the amount of the value in the home that you have paid for over and above the price you paid for the home. Now, there is potential for appreciation in owning a home, since the value may increase over time. Real estate values have historically appreciated over time, meaning homes tend to increase in value. Historically, homes and most real estate increases in value through appreciation, and of course through debt payoff of any indebtedness occurred when purchased. Many homeowners find that their home becomes their main avenue of wealth over time. If you sell your home for more than you purchased it for, you capture the appreciation gains, adding to your wealth. Appreciation can significantly boost your equity and the overall return on your investment in the property. Another exciting aspect of home ownership is the potential for appreciation. Real estate, unlike most depreciating assets like cars, has a historical trend of increasing in value over time. This means your home could be worth more in the future than what you paid for it. And when you eventually sell, these appreciation gains translate to additional wealth for you. Let's say you buy a house for $400,000 and over 10 years, it appreciates to $550,000 in value. You've gained $150,000 in equity on top of the principal you've already paid down on your mortgage, significantly boosting your overall return on investment. Now note, while appreciation is a possibility, it is not guaranteed. Market conditions and property-specific factors can influence home values. Appreciation is defined as the increased value of your home from the external factors that increase the value of your home, like inflation or the increase due to market conditions. It comes to you free of any payment or cost to you. Now, there are also tax savings from home ownership that are not available to a renter. If you have a capital gain from the sale of your main home, you may qualify to exclude up to $250,000 of that gain from your income, or up to $500,000 of that gain if you file a joint return with your spouse. This savings is money in your asset holdings, essentially free of taxes if you qualify for the tax break. This information is contained in the IRS publication 523. When you own rental properties and you sell your investment property, the IRS allows one major form of capital gains break, essentially deferring the tax consequences of the sale. If you're selling an investment property, you can use the process known as a like-kind exchange, or known in the financial world as a 1031 tax-deferred exchange, to lower your tax burden, but this process only applies to investment and rental properties. For answers to your complex financial questions that are relevant to your own situation, consider working with a vetted financial advisor. Homeowners may also be eligible for tax deductions on mortgage interest, property taxes, and certain closing costs. These deductions can lower your taxable income, potentially reducing the amount of taxes you owe. In many countries, homeowners can deduct mortgage interest, property taxes, and even some closing costs from their taxable income. These deductions essentially lower the amount of income you're taxed on, potentially leading to tax savings. Now remember, tax laws can vary depending on your location, so consulting with a professional tax advisor or tax attorney will give you a complete picture of tax issues in your state and country. Now, can you see the clear advantages of buying a home versus renting? You need to live somewhere, and you might as well be paying yourself and gaining wealth for yourself rather than paying to live in a property where you're essentially paying off the mortgage of your landlord. Granted, there are times when renting for a period of time is more advantageous, but in the long run, buying and paying for your own home will be the better financial decision. Most people's major investment and financial asset is in their own home. In some of my other posts on this channel, I discuss how to come up with the initial investment cash in order to begin investing. Please check them out. Please feel free to comment, and I will answer any questions you send to me. My goal is to help as many people become savvy and sound investors, build their own wealth, and have a happier life. Please like our channel and subscribe. Please keep coming back for more financial and life coaching. Thank you.